Yoni, welcome to Real Vision.
Thank you very much for having me, Ash.
It's a pleasure to have you. You, of course, are the CEO of eToro. Tell us a little bit about your shop and what you guys do.
Sure. Well, eToro today is the world's largest social trading network. We have 18 million registered users who can trade commission-free stock trading, cryptocurrencies, currencies, commodities, and indices from a lot of different equity capital markets. And they do that within our social network. So people can actually see what other people are doing. You can see the track record of different investors in eToro, their portfolio allocation, a lot of different parameters on their investments. And we've invented the concept of copy trading. So when you see a good investor who has been successful for several years, you can basically take a part of your portfolio. Let's say you deposited $10,000 in eToro, you can take $1,000 and copy a popular investor on eToro, which then replicates his entire portfolio into those $1,000. And every time he trades, it trades at the same time and the same price in your account.
How can you guarantee the same execution? That's pretty interesting.
So basically, we've built our entire brokerage platform as well as the software of social trading and copy trading. We actually wrote a couple of interesting patents on it. So it all comes down to how you clear trades and how you basically place the trades in everyone's accounts. So just as an example, our top popular investor today has 45,000 people copying him with more than $130 million copying him. So basically every time he trades, that trade gets replicated to 45,000 different accounts.
Interesting. One of the interesting parts about your story and the origin story of eToro is that you're not a banking guy, you're a computer science guy. Tell us a little bit about the origin story of the company.
So I fell in love in capital markets very young. So I was trading during the dot-com bubble. Started trading when I was about 13. Got some
Wow.
shares from my father. He was the CEO of a public markets company to my bar mitzvah. And sort of, I remember still my first trade in a bank software and how that was like an aha moment of figuring out how capital markets connect the entire world. And I've been a software developer also since I was very young. And that was the beginning of my career as a software developer. So always passionate about both technology as well as capital markets.
Right.
And when we started eToro, I started eToro together with my older brother, Ronen, who comes from industrial design background. So he's a product guy. And he just used to make fun of me that I have an accountant fetish, that I always sit with multiple screens and charts and Excels. And he used to say, it sounds so interesting that you're dealing with financial markets and things go up and things go down. But eventually, when I look at the user experience of what you're doing, it's horrible. It's like you're an accountant. Sorry for saying bad things about accountants. But then when we started eToro, it was really about brainstorming about how can you hack the user experience? How can we make financial trading and investing simpler? And we started eToro with the vision of opening the global markets for everyone to trade and invest in a simple and transparent way. And we really started by simplifying the user experience and the onboarding and how do you open an account. And then when it evolved, what we realized is that the most used feature on eToro were actually the social elements that we embedded into the platform. And
Right.
since we wanted to increase the engagement of our users, obviously, we basically expanded that into an entire social network where our users can actually see what other people are doing. They can talk to one another. You can actually go to the Google page, for example, in eToro, and you'll see 7 million people following Google stock on eToro in a feed where people are just talking about Google or a specific asset. So what we realized is we wanted to create that trust between people. And the best way to educate yourself about the markets is both through hands-on experience, but also by observing and copying the hands-on experience of other successful investors in the platform.
Yeah, it's so interesting that you guys think about it from from a user experience side, I've spent a little bit of time in the online brokerage space myself, and for the most part, that's not. It's usually the opposite, right? People think about the functionality first, and then they think about how to convey it. But this idea that you think about user experience, you think about social engagement, it's really a fascinating one. To switch gears a little bit, tell us a little bit about your journey personally and as a company into the digital asset space.
Sure. So we were very sort of in another different type of storm than today during the GFC, the global financial crisis. So we started eToro, we're a fintech company before the term fintech company was even coined. And during the global financial crisis, we were trading, we had a lot of different trading partners where you settle and clear trades. And what was very interesting to me as a young entrepreneur is to understand how broken the current financial services industry and when you experience something like the GFC, where you're at the middle of the night trying to figure out whether the money in the bank is going to be the money in the bank the next day, and you realize you don't actually own the money in the bank as a company, but you have a responsibility towards your customers. You need to suddenly distribute the money with a lot of banks. You try to execute trades in the market, but the market doesn't work. So that was a very sort of hands-on experience as an entrepreneur, realizing how, from a computer sciences background, that the system simply doesn't work, right? So when bad things happen, everything freezes, and you don't know where your money is, if it's going to be there tomorrow. You can't necessarily, it's hard to move it with T+1 and T+3 settlements, and suddenly clearing trades, which a day before was all automated, suddenly things stop from working.
Yoni,
And
let's
that,
just, I'm sorry to break in, but let's just give a primer to people who aren't as familiar with the back end mechanics of what clearing and settlement is, what T+1 or T+2 is, and why it's so critical to this experience. It's one of those concepts that when everything is working well, it's something that everyone ignores. And when there is a problem, it is the most important problem in this space.
Sure. So again, on a regular sort of market conditions, you expect every trade you do with a trading partner, with a bank, with clearing providers, to settle. If it's a currency, it's usually T+1. In stocks, it's usually T+2. And you basically will wait those 48 hours for those trades to settle in your account. So if you as a firm are buying basically for your customers a share, the share is going to settle only 48 hours after that. If you're trying to trade euros to dollars, again, the settlement process is usually by the way, for people who understand blockchain, I have this story to explain T+1 to T+2. So my grandfather actually built a bank in the 50s, a Swiss bank. And I remember as a child, he used to tell me about running a bank without computers. So if you try to think about how do you run a bank without computers today in 2020, most people can't even imagine that, right? So he had multiple branches, and people were actually writing in a ledger. So every teller basically had a ledger. They were actually writing, a person would come to the teller doing a transaction. They would write that to the account manager ledger. Then there was the branch manager who basically took all of these tellers' ledgers, consolidated into one branch ledger. Then there was a guy who's moving between all of the banks in a motorcycle at the end of the day to take all of these branch ledgers to combine them into the bank's ledger, which was then submitted both from a regulatory point of view to the books. So that was the bank books, right? That was right. The ledger. In order for the bank to understand that everything settles, it's just the next day. Why? Because the next day they run all of their settlement processes with the ledgers of all of the other banks, right? So the bank ledger would say, we're bank one, our customers in aggregate sent X amount of money to bank two. They need to see the bank two's ledger to know that they see the same things. The banking system basically still works the same. So if you think of a single bank, things can work in real time. If you think of multiple banks and multiple parties, they usually need to wait for 24 hours to validate in simple transactions, or 48 hours if it's multiple party transactions. Now, for people who understand blockchain, basically, the entire banking system works on a blockchain that happens once every 24 hours. And the same thing that when you send a Bitcoin transaction, sometimes you need to wait for 6 confirmations to make 100% sure that your transaction has been confirmed. That's T+1, T+2, T+3. Right. That's the level of sort of connectivity between the banks, is the difference between the blocks. The issue is the entire financial services industry still works on a blockchain that's the block time is 24 hours.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.